Hey, welcome back. This is Vito Skarnakia. Today we're talking about all sorts of different things outside of the realm of, um, within the realm of real estate, but also looking at what's going out, other indicators, other things that are going to affect our housing market. And we're also going to talk about the housing market and seeing why it's stabilizing. It's funny, the the what did I call it? The thumbnail I put up there was like the housing market's crashing. Well, no, not the housing market, but the Michael Burry, the guy who called it in 2008, says that the crash is starting. And you know, he's not politically driven. He's driven for his stakeholders, and I understand that. So for me, it's viable to listen to him versus the media or a policymaker who, they're in it for their own good. Obviously, he's in it for his own good too, and I'm pretty sure he's stacking up to short a lot of stocks. But Michael Burry, we're closing in on you. I'm watching him almost daily, seeing what's going on, talking to a lot of my investor uh, mentors, and a lot of people all across the United States, and the market is truly cooling. The real estate market is cooling, but we need it to cool. I mean, going up against 1825 other buyers for one house, it's ridiculous. It was ridiculous. I mean, we did well for our sellers at that time, but the buyers really paid for it in the shorts. So, uh, a lot of these things are salacious from the reports, but I do want to go over it. Um, Feds are testifying. I think it's next week, like the 13th, 11th, 12th, I don't know. So next week they're going to testify, and everybody that we're talking to thinks it's going to be 0.5, but it really should be 0.7 or 75 basis points, right? We need it to slow down the inflation even more, right? We're at an all-time high of 9.5% or 9.1% or what have you. That's not healthy. It's very untenable for people that can't afford it. Um, I don't know what's going on with California, but they just passed a law saying that um, franchise fast food restaurants with over 100 employees have to pay their employees $22 an hour. Now, I get it. I understand the whole idea behind that, but I'm not going to pay $20 for a Big Mac. I'm just not. I just choose not to do that. For that kind of money, it's cheaper for me to raise a cow and take him to the butcher myself. But, what do I know? I'm not an economist. Here you go. See, Michael Burry says that the epic market crash he predicted is in full swing. Take it with a grain of salt, guys, right? I'm just reporting what I'm seeing so you can build a bigger picture so you can decide if it's time to buy or sell or move. We're going to go into that in a little bit. We have this little thing right here that we're going to talk about in depth in a few minutes. Don't let me forget it. And if I forget it, hold me to it. Rates are at a crazy high again, 6.041. That is quoted. I've seen it as high as 6.25 for a 30-year fix. But guess what? You don't need to stay on a 30-year fix. Right now, we're in a transitional period. If you're in a position where you need to buy, your landlord's kicking you out, and it's really time for you to buy a house, this is actually a good time. And I'll tell you this 100 times. It depends on your needs. I'm not saying everybody should go out and buy a house, but I'm saying if your needs warrant you needing to buy a house for whatever reason, now is actually a good time because there's less competition. There is still competition out there, but houses are sitting on the market a lot longer. You don't have 17 to 25 offers within hours of putting it up on the market. That just doesn't happen anymore, which means buyers are in control, right? When the market crashes, if the market crashes, who knows, right? But if it does crash, we go over here real quick, come over to my favorite graph of all time. Right now, there's less competition, because we're right here. But as soon as we start a downfall, more and more people come out of the woodworks because they're like, you know what? This is what I've been waiting for. I'm jumping in. And now those people are putting houses or offers on houses with multiple offers on it, and they're competing again. If you're in a point where you have to buy a house and you can't compete for whatever reason, say you have an FHA or a VA or a USDA loan, and it's very low down payment, or you're struggling for something like a down payment or a standard down payment, now is the time to do it. Well, Vito, I should wait. Yeah, you should wait if you had all your ducks in a row. If you had perfect credit, 20% down payment, you're ready to go, and you can jump on a house and purchase and buy $200,000, $300,000, $400,000 over list price. If you could do that, great. If you can't, now's the time to do it. Well, I want to sit for the market to come here. That's going to happen in a flash. It's going to happen. We won't even know that that's happened until a couple, 3 weeks later, and then it's too late. And I can tell you that because I've been through a few of them. So I'm not saying that you have to go out and buy a house right now. I'm saying that this is a good time. If you're in one of those square peg round hole situations where you don't necessarily, you've been struggling to buy a house, you're sitting on the fence, this is the time to do it. And don't worry about the equity that you're going to lose, because in 10 years, the market's going to come back, or it should come back, right? You can't tell the future. But here's the other thing too. It makes it less affordable, but not really, because look right here. Get a 3-year ARM. Get a 3-year ARM. 3.375, 2.34. That's without buying points down. That's with that 2.3. Get a 3-year ARM. It's not going to last 3 years. It's not. And even if it does, it's going to go up incrementally. It's not going to go slam up to 15%. It's going to go up just a little bit. And I'm not recommending this for everybody. I'm saying go talk to your financial advisor and a loan officer and come up with a scenario that best works for you. What if this happens? Understand all the different things that could possibly happen, right? So rates are going to continue to go up. We think by November, it's going to be about 7%, which means this will be a little bit higher, which means that inflation, I don't have my inflation chart up, but inflation will be hedging. It'll start slowing down and maybe even come down a little bit, right? Let's go back to this thing right here. Back here, when Volcker cracked it up and went up to 15, 17%, slowed down the inflation like you wouldn't believe. We needed that to happen because 15, 17%, or that sky, I think it was 25%. I can't remember what it was. I'm not going to say. Whatever these two inflation parts were, it was sky high. It was crazy. I remember sitting in the car with my mom waiting in line for gas because it was our day. We had alternate days, and it was based on the last number of your license plate to be able to buy gas because we were rationing it. So that was about here. Crazy times, right? How long do recessions last? Guys, I want you to hold on to this one. This is my little hook to keep you watching this video. I didn't fill up my glass with water, so I'm kind of parched. So what are some of the things? Remember, we're talking about house of falling cards, house of cards falling down. There's a lot of things that could be the tipping point, right? We're talking about internally, meaning within the nation, we have inflation, we have jobs, we have stock market, we have automotive repos. I keep on saying that, but I swear that's going to be our tipping point, at least for here. Once something snaps, it could be outside, it could be in here, right? And in the globe, I know we're talking about European energy. We're talking about food shortages right now. We're talking about China going through housing crisis. We're talking about Australia, New Zealand, and Canada becoming forced sellers because of the way their finances, their financial systems, their loans are set up. They're going to become forced sellers because at a certain point, like an ARM, after 3 years, this starts going up. In Canada, I guess it goes up a little bit differently. It doesn't just step up. It escalates quite fast. So there becomes a point where They don't have enough equity in the house, and they have to refinance, and they can't refinance, and now they're paying double their payment. It's happening. Okay. We talked about that already. Housing starts completely stalled out. Talked about global. Ugh! Pisses me off to no end. Did you know in San Jose that we have a large item pickup service for free? I mean, we pay for it, but it's free. You don't have to pay for it. Did you know that? I see it all the time where people do illegal dumping. Now, it's not for construction stuff or dirt or what have you, but mattresses, refrigerators, old beds, what have you. Call up your local recycle company, not the waste management, not the garbage guy, the recycling company. And there's a site. Actually, I'll just go right here. Actually, you just Google a large item pickup, San Jose. And this is the reason why I'm a little aggro right now. This cost you 5 minutes. Call them up. Hey, I have a mattress or I have a bunk bed. My kids are grown out of it. I can't sell it on eBay or Craigslist or wherever. Facebook Marketplace. Nobody wants it. I need to get rid of it. This stupid freaking file cabinet. Well, guess what? People don't know that. Get the word out. Tell your friends. Did you know that there's a large item pickup in San Jose? It's free. Yeah, absolutely free. It's free. There's no excuse. On my corner over here in my park, there's a filing cabinet. And then right down the street, there's 2 mattresses. I called illegal dumping. They're coming to pick it up. So don't worry about it. You know, San Jose, it's a large bureaucratic amoeba, and it takes a while for them to get the people over there to pick it up. So it will come. But guys, tell your friends. Tell your friends. Shoot. Tell your friends. Large item pickup. I totally got out of this whole thing. Well, actually, it's actually good because I haven't shown you this yet. But I went through all of this. Large item pickup. You have no reason not to call them. And you don't even need to know the URL. Just go to Google, type in large item pickup San Jose. And look, even San Francisco does it. And it takes you right there. Okay? No excuses. Tell your friends, tell people. There's no reason for you to dump shit on the street. It takes longer for you to take that, whatever, shove it in your trunk of your car or your truck and drive over to someplace and find out and wait for nobody to be there and dump your trash or whatever, than to call. It takes you 5 minutes. It's ridiculous. Tell your friends. I'm done. All right. The market right now is stabilizing. And I said that in my little thumbnail, in my title. The market for now is stabilizing. See, look, all these red numbers means that the market has gone down a little bit. Whatever that number has gone down. This should be, 17. That should be black right there. See how that works? 40 days on market. That's how everything started here. 40 days on market, we're kind of equalizing. If you look back in the day, back in January, these numbers were 25, 30, 40. Now these numbers are 400. But these are the same houses pretty much staying on market for quite a while. There's that one that was in Camden Ave and Almaden finally sold. Yay. 90 days on market is continuing to go well. So again, it's stabilizing, right? I'm not seeing the numbers go down massively. I'm just seeing them kind of like plateau. They're kind of at their peak, kind of like, this right here. So San Jose, these numbers are going down. Yes, the number of pendings are up, but also the number of cancellations are maintaining high. What this number right here means, these are guys, home sellers that think that their house is worth X plus 25%, where the market has collapsed or contracted or shifted. I'm calling it corrected. We're in a correction. We're almost in a, we're seeing a correction, not a shift. Stop listening to the people that say shift. But these numbers are good. This is actually good for our market right now. I don't know what's going to happen if it goes up to 7% next week or 6.5%. It could slow down and inventory might increase again. I think for right now, this is a good number for our natural equilibrium, our natural number of a healthy market. When we had less numbers on market, like we have, I don't know how many we have 508. We have 508 homes for sale right now in San Jose. Now that's not every one of them. They're not they're not condos, townhouses, mobile homes, right? They're single family homes within a certain demographic So, which is good because you see these numbers getting stronger. For every 2,000 people, there's one house for sale. Now, that's not for every 2,000 people that are in the market. That's for every 2,000 people that are living here of the 1 million. We have half per 1,000, right? We're seeing the list price to sale price ratio go up a bit. We're in a really tough spot. That could go down once it goes up to 6.5% or 7%. What do I know? List price to sales price ratio last year was 7%. If you're looking, that's about an average of almost 1.9% or 9% over 109% over list price. The high, these are really telling right here, right? 125% over list price. Well, that was either an agent that underpriced it and got a really high price, because naturally buyers are going to raise the price to where it should be, where the market should be, or they're going to put it too high and it sits on the market for a very long time, skews the numbers, or it's in horrible condition, right? But conversely, this could be like completely primo, beautiful house worth its weight in gold, and people are like, I'm going to buy this house because I don't have to do a damn thing. Versus this one right here, it's been on the market for 60, 90 days. It's in a world of hurt. They overlisted it, whatever, and the seller's in a pickle, and they're like, okay, I'll take that number, whatever that number was, right? Average sales price this week was 1.428 million, almost 1.429. Last year it was 1.572, so we have contracted. That's week by week. It's week by week. Week by week means nothing except for the last week's score, right? It's like when you look at a football game, that's great, right? The Niners won or whatever, right? Well, great. That's one game. You have to look at their entire season, and this is kind of looking at their entire season right here, right? So you see overall how the market's doing, how it's performing. So if you look at these numbers, this averages back out to when I first started measuring these numbers. So we're looking at 1.5. Last year is 1.560. So it's kind of contracted on the average about $60,000. It's not bad considering the fact that, you know, we went through all this turmoil over the last 6 months. A median price is 1.426. This is an important number for you to just have a good check and balance on it. Oh, yeah, right here. Days to sell over time. This is the absorption rate is 1.6. This is where we hit it hard. This is 1.6, so it actually got better and improved over the last month, which is good. That's why we're seeing reds here. When the number goes down, the absorption rate goes down. It means it's a healthier market. However, again, if it goes to 7.5%, or the market crashes, or China goes bankrupt, or World War III breaks out in Europe, or whatever, a whole plethora of different things that could happen. I'm not saying that the sky is falling, but I'm saying bring your umbrella. Right? Okay. Oh, and by the way, if you have a comment, shoot me a comment. I'm 99% sure this is working, so we'll see it and I'll respond to it. You're very welcome to tell me I'm full of crap, or I'm on spot on, or ask me a question, or what have you. I have zero ego in this. This is me learning it so I can teach it. And it makes me feel like I know the market a whole lot better. I've been doing this for 20 years and I understand the market very well. This allows me to be able to communicate this daily to clients and prospects and just people on the street, because I want to feel like I know what I'm talking about, so much so that I can articulate it professionally, I guess, right? When I say the market's crashing, it's not because of prices, it's because of transactions, right? Again, these are the game day scores, right? Score boxes, box scores. Is that what they box scores? You can tell I'm not much of a sport guy. 70% down from last year, week over week. Week over week, 70% drop in transactions. I have a house that's been sitting on the market in Morgan Hill, and this is San Jose, right? In Morgan Hill, and it's been on the market for 2 weeks. And the first open house, we had a good traction. We had like 5 people come in. The next day it was 7, and then a couple neighbors. This last weekend, we came through. We did an open house Saturday and Sunday. Open house on Saturday, 0 people came through. So something's amiss. I'm not saying that one house makes or breaks the market, but something's happening, right? So we lower the price, see what happens. 70% drop in transactions. That's concerning, considering the fact the last 3 weeks on average bring you down to 60-ish, 59, 60, 61. On par for the last few months, we're looking at 50% reduction in transactions. So the market has crashed. The transactions have crashed. We're holding our own for pricing for the most part, right? If you ask me, I will send you any week's numbers so I can show you. I collect them, and I only keep them for a couple months because I just don't keep them for more than that. But if you want to call me on it, or you want to ask me for 1 week's numbers, I'm happy to share these with you. How I aggregate everything, I'll walk you through it so you can absolutely understand it a little bit better, because it's important for you to understand it, right? So days on market on average right now for the last 3-4 months, 22 days. The last few weeks have been about 23 days. If you average that out, it's about 23 days. Last year, we're on average probably closer to 11. This last week last year was 13. So it's doubled for the most part. This I like seeing. That's a good, strong number. However, we're seeing cancellations continue to stay pretty heavy too, right? This needs to be upwards of 150 to 200 a week in order to keep that market going crazy spiral high, right? We don't want that. So this is healthy. This is healthy right now. Closes last week, we had 77. Last year, we had 109. Again, well, we already talked about that. Cancellations, TFT back on market. That means the house was under contract and the buyer couldn't qualify. The buyer lost his job, broke his leg, couldn't work, freaked out, said the market's going to, I don't know, whatever. That's a crazy low number, guys. That's really good. That's a great indicator that the market's back, right? Why am I telling you that, oh, the market's back? I don't know if it's back. I think we're getting back to normal. And that's what I'm saying here too. If you look at all of these numbers, you're seeing the market kind of plateau as far as inventory is concerned. When we look at inventory, there's either a surplus or a shortage of inventory for whatever it is, right? Cups, pens, gas, houses, right? You have to find that natural equilibrium. And I think we're finding it in all of these right now. I think all these houses are coming back on market and staying on market for the natural time that there are for those specific areas, right? So like Knoxville, I think we're seeing, a little bit of a change there. Nashville, Las Vegas, that number is kind of creeping up, but I think it's not like jutting up or hockey stick jutting. New York's doing better. LA is doing better. Austin's doing better. So just keep that in mind. What are these numbers telling me? I think we're kind of like this right now. We're kind of at a plateau. We're not seeing a peak. We're not seeing a dip. We're seeing, okay, what's going to happen? The market's used to seeing the 5% interest rate, 6% interest rate. Like, okay, this is the new normal. Let's keep on moving forward. I still need to buy a house. I need to sell a house, right? Okay, so 2 things before I'm going to let you go. Well, actually, yeah. How long does a recession last? And yes, you can Google it, but I can tell you right now it's 17 months on average, right? That doesn't mean this one's going to last 17. It could be 2, could be 18, could be 6. We don't know. But I calculated it out saying maybe June 1st was the start of the recession unofficially, because we won't know until years later. But let's just say it was June 1st. I'm not saying it is or not, but just for argument's sake, if we went 17 months, that's November 2023. That means we have a bit of up and down to happen if we go into a massive recession. Again, I'm not saying that we're going to, but out of all these recessions, almost every time, except for this one right here, but that's because the housing market and the finance sector that supported the housing market caused the recession. But every other recession that you see here, prices went up. All right, so we go back to this thing right here. And if we're saying that we're right here and we're going into a recession, whatever, if it's a couple months, a couple weeks, a year and a half, and you're like, I think it's time for me to buy a house, what are some of the things you can do? Well, if you were my client, this is what strategy we would work with, right? We would find a house that's been on market for a little bit longer than the normal, knowing that there's something wrong with it in location, condition, or price, or all 3, and understand that we can negotiate around all that, right? So let's just use the arbitrary number of $1 million because it's a nice round number. In a typical market, you're paying over list price, right? So that's right here. Average list price, 9%. We already showed you that last year, that's about what you're paying, about 9%, right? So, and again, doesn't have to be exact. This is just for example purposes. So you're paying $90,000 more for the privilege of buying somebody else's house. And you're buying it as is, no matter what the condition is. And you might have to let them stay in the house for 2 months or 3 months for free sometimes. It is what it is. It's crazy times, crazy way. It is what it is. Today's market, as in the last couple of weeks, maybe the next week or 2, maybe a little bit longer, this is what you can do, right? So the average list price is now 99%, because the last week when I was doing these numbers, we were seeing 99%. But even if it's at 100, we can do that. It doesn't really matter. So instead of $1 million, you're getting $10,000 off, whopping $10,000. You have an 80% loan. The difference is, the difference between sales price between a hot market and a slow market for $1 million is about $100,000, right? But in a slow market, you can also negotiate closing costs, which is about 4%. And you can also ask the seller to pay for buy downs. Buy down, rate buy down. You can actually buy your rate down from, say, 6% down to, I don't know, it really depends on your lender, the loan, the bank that we're working with, all that stuff. Let's just say it goes from 6% down to 5.25% for 2 points. I don't know if that's right or not. I'm just throwing it out there, but it's a whole lot better than a kick in the pants, right? And if the seller's paying for it for 2%, why not? All right, concessions. Hey, that carpet kind of smells like, or it's a little bit worn. You think you could kick down a little bit? So you can negotiate that as well. And you can also do repairs. And guys, this is important because if you're doing an FHA or VA or USDA or any kind of program, the seller has to work with the buyer. In a market where it's crazy, when there's tons of competition, the seller doesn't have to work with you. In a place where you can find the motivated seller, right? Not every seller is going to be motivated. Some of them are going to be wishful thinking type buyers, thinking, "Oh, my house is worth X," right? I'd rather take it off the market or rent it out, or I'm not going to sell it for that. Look, they're not motivated. You have to find the right person at the right time and make this deal. And that's my job to be able to do that. And we're successfully doing that. So you can ask for all of these. So on top of that, instead of paying that and your closing costs and possibly 2% to buy down the rate, and you have to suck up the carpet or the floor or the roof or what have you, and then Section 1 clearance, you can get all that taken care of. If you have FHA, VA, USDA, I think those are pretty much required that Section 1 is cleared. So now it's really a great time for you to buy. Well, what if the market crashes? Again, the market crashes, you're going to have more competition here, especially in the Silicon Valley. Right? I can't tell you what it's like in Fort Myers or Fort Collins, Fort Apache, the Bronx, wherever. I could tell you Silicon Valley for the last 20 years, that's how deals are made, right? And I can show you how to save money when you're buying a house. And it doesn't always have to be on the price. Sure as hell can be on your payments. All right, enough of that. I think that's it. All right. Switching things up on my control panels down here now, and my numbers are all up here, so I get to look at the lens a little bit more. Next week, I think we're going to have median home values reported. It might be next week, it might be the week after. But here's the thing, guys. I know I feel like I'm throwing this stuff out and talking like I'm Chicken Little, but I'm not. This is a great time to do a deal. If you can't really see it right now, but yeah, well, all these, you see a big red blur. That's all the clients that I'm working with right now. I'm crazy busy and I'm so grateful. And guys, I appreciate you believing in me and having confidence in me to help you buy and sell houses. At the same time, they're seeing these reports and they're jumping off the bridge and saying, Yahoo, let's make it happen. And buyers and sellers and people that are moving and buying and selling. And it's been just fantastic. So not bragging, I'm excited and I'm so elated and so grateful that you watch, and I appreciate it. And I hope you tell your friends about me and hit subscribe, etc. So again, if you sat through the end and listened to all my diatribe, how long recessions last, etc., I think we're going to pull through on this. I honestly do. There's a lot of other things that we can talk about global, and I think we'll talk about that Monday or next week. So that's it for now. I've been talking for 35 minutes now. I'm Vito Scarnecchio with the Avatano Group, powered by Compass. We'll see you out there.